Welcome back to my channel. In this video, I wanted to cover Allstate, the big insurance company that announced their earnings yesterday. And there was a bit of good news and some bad news in that report. I wanted to take a look at the report and see if it changes my overall value of this company. I am an Allstate stockholder, and so far, so good. It's been a good stock to hold. Now, Allstate is with many insurance companies that have been expanding the revenues, but at the same time, costs have been going up. And that really showed up in their earnings. Catastrophic losses went up, which really dug into profits. The good news is revenue really went up. Now, is Allstate a good stock to buy at this time? Well, to make that decision, I need to see what the intrinsic value is of this stock. Intrinsic value calculated by looking at their cash flow, getting a forecast of that cash flow, and then discounting that cash flow to today's value. Also look at their earnings per share and value the company based on earnings per share. Let's take a look at Allstate fundamentals, and then we'll do a full review and valuation on the stock. So the stock is a $52.6 billion market cap stock. Revenue is above that at $65 billion, so you're paying less than 1 times revenue. That's typical within insurance companies. The PE ratio is 13.55. Analysts think it's a buy. It's discounted by 9.5. Year to date, this stock is up a little bit, 2.9%, and pays a 2% dividend. So for where the stock market is in 2025, that is a good stock. For the 1 year, 17% rise and that dividend, this is a winner. And over the 5 year, it's gotten the job done. 87.5% rate of return plus a dividend. So you're nearly at 100%, which is a good stock. It's going to double in value. More importantly, investors that bought in the 2023 era are doing better than that. And that's when I bought into my Allstate stock. So the rate of return is better than that if you bought at the right time, which is always important. Buying the stock at the right price is always a good idea. When we look at revenues expanded nicely. That's one real positive in their earnings. Revenue continues to grow. People need insurance, and insurance companies are raising their prices. There's no way around that. They're having to pay more for the claims that come in for either damage to homes due to weather, especially extreme weather, which seems to be happening more often, or cars are increasing in value. So when an insurance company has to pay for a car that's been wrecked, they have to pay more. So the prices have been going up. So the top line revenue is growing. That's good to see. Their expenses, especially in the first quarter, did go up. Now that could be a problem. So they need to continue to adjust and see if they need to raise prices for particular products of insurance. Cash flow is going really high. And I didn't want to take that high number. It's great to see that cash flow is really high. So I'm going to take an average of 5 years when I look at the valuation of this stock, but cash flow is really increasing, which is good news. Looking at what analysts believe the stock is worth, on average, 15 analysts cover the stock and they think it's discounted by 9.5%. And when I look at the information that is generally available on earnings per share this year is expected to be $17.54, which increased a bit. That'll bring the PE down to 11.3, a real manageable PE. And then in the future, it's going to drop because they're growing their profits quite a bit in 2026, up 22.5%. That looks great. So I'll use both the cash flow and the earnings per share data in my valuation model to see what this stock is worth. How desirable is the Allstate business, and what kind of discount would I need to have in order to invest in the company? Well, let me review that. So the most desirable companies like Microsoft, Meta, are up here in the green because they have very strong moats, competitive barriers, and they also are very profitable. They grow, they create just tremendous cash flow. And companies in the green, in order for me to invest, it doesn't require an extreme discount. In some cases, I buy at fair value, depending on how strategic that company is. But Allstate's not in that category. Allstate does not have a tremendously strong moat. When you think about insurance, you can get car or home insurance from Progressive, Allstate, State Farm, Geico. And you would probably feel the same way about any of those products. So you can shop around and probably go with the best price for you or the best coverage for the area you live in. That taken into account, it really doesn't establish a strong moat. It's not like Allstate is exclusive in a particular part of insurance. They're competing every day, which shows up if you look at how much advertising is in the insurance industry. It's pretty extreme. You see a lot of commercials during TV programming, sports, even online. You see a lot of their ads. So they don't have a strong moat, but they are profitable. They generate a lot of cash. So I put them in the gray down here where you got a low moat, high profits. Now, I invest in the gray when I get a compelling discount. A compelling discount that shows me that, hey, this is a good business. It's going to be in business for a long time. And I am going in at a really nice acquisition price. So that's where Allstate is. I would have to get a really compelling price to invest further into Allstate. Now I'm going to go over the intrinsic value calculations that I've completed for Allstate, starting with cash flow. And the concept of getting intrinsic value based on cash flow is projecting uh, a conservative, accurate forecast of cash flows in the future, and then discounting and getting to a net present value of those cash flows. And I'm doing that here. Here's the forecast of cash flow. And the cash flow in the most recent year is really high, and I don't want to be overly optimistic there. So I'm taking a 5-year average. They are growing the business nicely. Cash flows are growing. So I'm going to grow the first year by 10%, subsequent years growing by 6%, and then terminal value grow by 4%. Now, insurance continues to get a little riskier each year with so many catastrophic events happening and so forth. So I'm going to raise the discount rate to 9. And if you have seen my recent videos like Meta, it was an 8 discount rate. So I'm taking a higher risk with Allstate. So I'm going to go to 9. When I take that into account and I discount all the cash flows I expect, I get an intrinsic value of $118 billion. I add cash and take away debt. I get to an equity value of 110 billion, which is far above its current market cap. And when you compare the stock value per share and the stock price, it really is a compelling discount based on free cash flows of 53%. Insurance companies have been really good investments for the last 2 years. It looks like they're still going to be good investments going forward. Earnings per share brings us to a more fair price because we're using earnings per share at $17.50. I'm using a PE of 12 since they're a growing business. I think they deserve a 12. And based on the industry, that would be a good number to use. I'm coming in with a lower growth rate on earnings per share, not the 22 that they're expecting in 2026, just to be conservative. And when I use those numbers, I get to 14. When I blend the two, taking a greater weight in free cash flow, I get to a 44% discount. And that is a compelling discount on Allstate. So I'm going to be buying additional shares of Allstate. I think it's a good situation to buy into an insurance company at that discount rate. They pay a dividend, and overall, insurance is just one of those things that is a good investment. Warren Buffett has made a lot of money investing in insurance. So have other investors. It's no secret that insurance companies are run by really smart people, actuarians who really know how to price their insurance products and overall pretty much guarantee that they're going to be profitable over the long haul. So that's my review and analysis and valuation of Allstate. I hope you found it interesting. If you like analysis like this and videos like these, become a member of my channel. You can become more involved, get access to the tools like this valuation model that I just showed you, and also be invited to member-only events. I think it's worth it, and I'd appreciate it if you can take a look. There's more details in the description of the video, or you can find it on my homepage of my YouTube channel. So thank you so much for watching, and good luck with your investments.